The SharePickers Podcast.
And joining me on the podcast and it's not live, it's on video though, that's what I'm saying, live in his stripy shirt, Alan Green, CEO of Brand Communications. You all right, fella?
Yeah, I'm fine. Just at least you haven't mentioned the fact that these are my pajamas, because they're not. That's what the last guy said to me, who I spoke to this morning. He said, "Why have you got your pajamas on still?" I said, "Well,
but they're not pajamas because it's got a very formal collar for a pajama."
Exactly.
Normally,
exactly.
Yeah, so I can tell the difference, but I can't tell if you're wearing any bottoms though, Al. So that's more disconcerting than anything. It's always that.
But just to be fair, we can't tell if you're wearing any bottoms either. You know.
No, I'll prove it to you later. Woohoo! I mean, I'm surprised.
That'll have the viewers speculating now, won't it? Let's face it.
Anyway, check out Alan PJ Green on the video there. You can check it out. Are they? To me, it's not obvious.
Jeans.
And he's got very cold legs. They're blue, but jeans there. So did you watch the game yesterday, Al?
I did. Yes, yeah. I was very privileged because we had a great Sunday and finally we spent the weekend in London. The weekend up to Sunday morning. Got back Sunday morning. Actually got out on the motorbike very quickly, which was great. And then nice dog walk Sunday afternoon. And then I broke the news to Mrs. G and I said, Spurs are playing tonight and they're on TV. Oh. Do we have to watch it? Can't we watch this?
So you don't have to. You can go for a walk. I'll watch it.
Well, this is it. I said, well, I'll go upstairs. I said, I'll go upstairs here. Like, we've got the old Sky Eye upstairs or whatever, so you can watch it upstairs. We watched it there, and it was very good. But as ever, it was all a bit wobbly at the back. And, the first goal Forest scored, we were just all over the place. I mean, what were the defence doing? Goodness me.
Well, it's good that but you come away with 3-1. So my son was there again. My wife went with him, and she drove all the way up there, drove all the way back, and for the game. But and I was just watching, paying attention on sort of Google the scores on Google Sports there, and I saw 1-0 up straight away on Tottenham. So it was a good start. And all of a sudden, Tottenham Forest came back 1-0. Oh, here we go. But then fair play, 2 more goals in the second half. Up to fourth position, I think. A game in hand, same points as Aston Villa, but a game in hand. So it's it's respectable. How long left of the season is there? 'Cause I'm not a huge football fan, but.
The next two games, the next two games, they've got not Newcastle away on
and Man City as well, isn't it?
And they've got Arsenal and Man City. Plus, they've got to play a game against Chelsea as well, which is kind of the return legs. So
tricky.
So they've got a pretty tricky. But actually, most of the time, Spurs tend to play better against the bigger sides. I noticed that. They do. I'm stuck against a team you'd think they'd have no problems against. I'm stuck. So that's a mental attitude. It's like anything. The underdog will try their best to beat the better team. I mean, the better team then, if they get a bit blasé and just take it for granted, it's hard then to switch your psychology around. Anyway, let's look at the markets. Now, let's look at. Let me just get rid of this second view. Got some on the screen there. I don't want to show anyone. Yeah. There's the AIM all share. No, I just didn't want to show my tabs. AIM all share there, and it's look at that nice little rally from the lows of October. It was at 670 there, and now it's 744. Hit that high, but it's a nice bounce along here, consolidating. And I think it's only a matter of time if it'll move up again now and start pushing up. Let's see what the RSI is doing, because the RSI is building a little bit there. So it'd be nice to see that if we can get sort of 60 on the RSI, that's going to move up towards that top of the range. So, and let's be honest, if you look at the economic climate, I mean, in fact, I did highlight this today on Twitter feed today. Have a look at this. It's the UK growth at a turning point as the economy gains momentum. Output from UK business has risen for the second consecutive month to its highest level in nearly 2 years. Hopes are building this morning that the UK economy is pulling out of recession, and it's a turning point there. So that's good news. And also another one, Dr. Copper, which is always a good sort of barometer of the world economy and how it's performing. That is at let me get the commodities up here. There we are. Copper. That means that was over a year ago when it hit that sort of previous high at this level, and now it's attacking that with a bit of verve.
And in fact, gold as well. So, I mean, I think this is what central banks, isn't it, really? But
well, gold is. I put up a post this morning on my own feed. The China have been accumulating gold. This is the 17th straight month that they've been adding to their gold reserves, and that's a very telling sign. But of course, look at the price. I mean, I think everyone was predicting gold $3,000-$4,000 an ounce, and for the first time we've really broken out, haven't we? It's really
look at that breakout. Yeah, I mean that level there, 2,000 level was attacked.
It was
1, 2, 3, 4, 5.
I mean 2000 has been the benchmark for years and years and years.
Yeah, 2020. 2020, it tried to go. I mean, you could go back. Did go back. It was back at that level. Where is it? 1900 back in 2011, and then it. A big bowls of formation. That big bowl took 9 years to get from that. It attacked that 1900 level in 2011, and took 9 years to rally to 2000, pull back a bit, and now it's running again. That's very good. So you'll see that gold does that as big rallies.
That's a massive breakout. And I just said, there are so many junior mining explorers that have really good gold assets, and
go on, then name one.
Well, ECR, for instance, who I'm going to talk about shortly. They've just made a significant discovery today in Crescent, and that's it's factors like this that should, this sort of breakout should be registering on the share price of these companies. So that.
Yeah, but it's exploring, aren't they? So it's not as if they're selling the gold. By the time they get to pull that out of the ground, gold could be back down at 1100. You never know.
Well, the thing is, it's in the ground. They're going down a few meters, and they're finding this stuff, and they're finding it over extended areas. So actually, getting out the gold is not going to be so much of an issue. But I mean, we mentioned copper as well. I mean, copper, for instance, can everyone lobby their local MP to get onto the Secretary of State and get copper onto the UK critical minerals list?
I can't see anyone doing that. All right.
It's astonishing.
I think there's so many issues that people have, though, with MPs that go above getting copper on the critical mineral list.
Yeah, okay.
I write to you, the urgent...
If this reaches one or two people and that person emails or writes or phones up, it might just make
Won't make a bit of difference.
Yeah, every little
Let's be honest. There are laws that should go through about personal safety or anything else. Things that really matter that don't get through Parliament. I can't see them putting copper on the critical mineral list to get up there. Can you see them debating that?
It's on the European Union, the EU critical minerals list. It's on the US critical minerals list. It's on the Australia critical list. But for some reason, it's not on the UK critical minerals list. And when you consider.
Is it because we don't have any? We don't really have any interest in copper, do we?
Well, we do.
We don't produce it.
We have a big mine up in Wales. We have the Paris Mountain Mine, which has discovered a huge band of copper underneath an old existing mine works, and projects like this could get funding from such entities as the UK Infrastructure Bank, and create prosperity, create employment. They can use Holyhead Port to ship the ore out, all of that. So the infrastructure is there, but because it's not on the UK critical minerals list right now, it's not getting the attention and the funding support that it could be. So
it doesn't need it from the UK. Okay, why don't you just knock up one of those petitions, the government petitions, and get people to get 100,000 signatures on that, Al, and
well, the local
treat you a pint.
The local Angle CMP has had a few communications about this, but she's going to get a whole load more in the next few months.
Okay. Yeah, good. Well, it's one of those government petitions. Get 100,000 signatures, and you'll get that. And also maybe produce a draft email, copy, maybe something like, "Dear Mr. MP or Mrs. MP, I do apologise. Please, could you put copper on the critical mineral list because it's a mineral." And it's critical. End of. Regards. Alan Green.
Yeah. Hey.
Okay.
Typical internal combustion vehicle, 23 grams of copper. An EV takes 83 grams of copper. So, there you go.
Oh, yeah, but the copper's rallying. We know that. I mean, it'll happen. I mean,
Exactly.
Apparently, but this is all done in China. It's all done in China. I don't know if you saw that. I had John Mayer on, from SP Angel last week, and he said, I can't remember the stats, but EV vehicles have risen by 80% sales. That's what will drive it. And the BYD, this car, they're now selling those for 10 grand. So like, that is also, well, if they can sell that over here, that's, because you don't really, as I said to John, there's two issues you have with EV cars. One is that they're quite expensive compared to, ICE vehicles. Two is the range. Now, if you sell them for 10 grand, you don't mind having that as a hop around town car. Because, I think it's about, 60% of the journeys you do are less than 5 miles in distance. So it's fine. Yeah. So, China's going to steal the march on everything here. But of course, they're going to need the copper as well, because there's loads of copper. So how much in 23 kilograms in a normal car?
So
how much in a
internal combustion engine car, average of 23 kilograms. In an EV, it's 83 kilograms. So that's a huge difference, Yeah. So it's hugely important. And as you rightly say, I mean, we have an electric Skoda of all things, and it's a great little car. We went to London on Saturday, drove around London, came back, one charge, easy. So we've done 8,000 miles on the thing so far, and it has cost us the grand total of £610 to charge. For 8,000
Is that good?
miles. That's brilliant.
8,000 miles. Sorry, yes, sorry. I can't. So how much? So okay. So and on a normal day, winter's worse. But so if you fully charge it, how far can you go on that?
250, 260 miles.
Oh, that's plenty, isn't it, really?
Which is plenty.
Who does that in a day normally? I mean, most people don't do anywhere near that. They do 5 miles to the supermarket and back, or whatever.
Exactly.
Or to work, which is half an hour away.
Yeah, this is it. But I mean, from here on the south coast, you can drive to London, drive around London, no congestion charge, no ULEZ charge, nothing, and then drive back all on one charge. And average charge is about £13, £13.
Okay.
So we've got a charge station on the house. You use your high VAT with a smart meter or a smart meter, so you time the charge to draw when the power's at its lowest cost, and it's about £13 a charge.
Yeah, I think as soon as those prices are coming down, that will break the market. They will start seeing lots of demand. No wonder there's big demand in China. When I suppose maybe 10 grand is more expensive there, but when they break that price point, when it becomes a no-brainer on the price issue, people just buy one anyway. Because everyone starts to worry about these 200-mile journeys. You don't go on 200-mile journeys. Most people don't do 200-mile journeys. It's like, get over it,
Not in the UK. I mean, it's good in the UK because we have a relatively advanced infrastructure, and we're a small country. The bigger countries, it's a bigger problem. So when the range gets up to 400 or 500-mile range, then and the batteries are already here to do that. They've already been developed and taken that far. That's going to change everything. That's going to be the tipping point.
So the FTSE 100, look at that. So downwards, a series of lows starts having now, the highs, the lows there. So a series of lower highs, then they sort of level out here. They start running up. Now a series of higher lows, breaking up above that range. So it's quite nice there. And FTSE, anyway, so go on. What else? What do you want to talk about, Al? Which stock was it? Sorry.
Okay, so 3 stocks to talk about. I want to talk about the Harland and Wolff first of all. HARL, of course, the eponymous shipbuilder. Go on then.
Let me just say, I've got I've started the UK's first ever MicroCap League, right? And they're ranked on lots, but 20 different metrics, mostly growth value, health, efficiency, momentum, potential. That company, I've got now 115, 117 stocks on there. They've got to be about sub 100 million, generate revenue. Harland and Wolff was at the bottom. Is very indebted, and it's a little bit worrying, to be honest.
It's got a lot of debt, yes, granted, but it also has it's part of a consortium with a 1.6 billion contract to the Team Resolute contract to build 3 Royal Fleet Auxiliary ships, and as a result, they are expanding the facilities. The issue Harland and Wolff have got is that they have these shipyards which are incredibly expensive to run. They've got to train staff up, and they have these existing assets which are very hard to to restructure and refinance. And of course, when you're tendering for shipping contracts around the world, they don't. It's not just signed. It's a long, protracted process to win a contract. So in the meantime, you've got to pay those people. You've got to keep the facilities going, all the rest of it. And of course, that's where the debt factor comes in. And as we saw last year, they have worked to restructure their funding, and they've got 200 million of funding in place. But they also have this contract with, as I say, the Royal Fleet Auxiliary, which is going to be worth a tremendous amount of money over the next few years. They've just won, or they've just been elected the preferred bidder by the Falkland Island government to rebuild the Falkland Island port replacement, or to rebuild the Falkland Island port at Stanley, and that's going to generate revenues between 120 million over a 2-year period. They've also just won a new contract with for the Arnish yard up in Scotland, and that's going to be it's a fabrication contract worth some 3 million. So it's bit by bit. It's a difficult business to run, but backed and cornerstone by this Royal Fleet Auxiliary contract, or Team Resolute contract. It's very well placed, I think, for the next few years. And John Wood, the chief executive, has worked very hard to restructure the business, put the business in place, and they're now really able to compete internationally around the world, and they're able to compete with other companies going for contracts to rebuild, as we've just said, the Falklands port. This is a sign of an evolving company. As you rightly point out, Just, there is a lot of debt on the books, and there is a problem.
That's what I'm worried about.
And an issue with that debt. But
the revenue is growing, but it's, like I said, it's very low margin, and there's a lot of debt. I mean, look at the cost. So half year to 30th of January. They went from last year 15.4 million to 25.5 million revenue top line, and if you look at the operating loss, went from 14 million to 17.6. Now, if we look at the sort of balance sheet down here, loans and borrowings, or current loans and borrowings, 98 million, right? And loans and borrowings on non-current, another sort of 19 million. So that's and what's the market cap?
Yeah, market cap is just 19 million.
Oh, so that is it's quite worrying, isn't it? Really, I mean, I would say this is a very high risk play. Be careful, because you never know what's going to happen here. They've got net liabilities of 79 million.
They have, but they have a contract. The contract with Team Resolute is going to generate. It's going to be generating about 100 million a year. By the end of next year, and will continue to generate that sort of revenue ongoing. So, and that's just one contract. On the back of this, on the back of the contract wins, they've reinvested into plant, they've reinvested into the shipyards, and they're now able to compete and tender for contracts alongside other major shipbuilders around the world. And that's why we're seeing, preferred business, but a status.
Yeah, I just wanted to let people know it's a risky. I mean, in this area with high debt, a high debt environment. Look at that on the cash flow statement. They paid 1.3 for the half year in repayment of borrowings and lease liabilities, and of course that is not coming from a profit. That's coming from a loss. So that with that cash. I would say there are other players out there that are not as risky as this. I'm just saying, be careful. Be very aware if you can invest in this. Of course, it could be excellent top line, but you've got to look at are they making cash to service that debt? Because that's what worries me essentially. It's a little bit worried now.
Well, I think you can worry about the debt. That's and you should. And as we've spoken before, we've spoken before about companies like Warpaint. Like
I don't think it's a Warpaint. Warpaint are generating cash.
Yeah.
So and Warpaint different margins as well. So it's and top line growth and
different margins,
different business model, different structure, different more capital. It's up to. There we are.
I mean, there are pros and cons, and I totally get the debt picture. But I think also if you
I don't think you do, Al. I don't think you are getting the debt picture. This is really worrying.
I understand the debt picture totally, but I also understand the revenues that the company going to be earning from the Team Resolute contract, and that basically covers the debt comfortably. So when you look forward and you look what this contract has provided for the group, it's put it onto an international footing. They've been able to, on the back of this contract, upskill staff at the shipyards in order to compete with the very best companies, which is why, as I say, they've now got preferred bidder status with the Falkland Island government. And I think you're going to see plenty more of these contracts come in. So whilst they're carrying this debt, they're not going to be incurring a huge amount of additional debt on top of this. So if they can increase their revenues, increase their margins, and the debt's at the current level, then it becomes a very different business, and that could happen. That could happen pretty rapidly. But obviously,
there's two big ifs. I just want warn people. It's quite a high risk situation, and in this when debt costs so much these days, it's very hard to service that level of debt.
I think if you look at where the share price performance hasn't been good, but I think given that there is plenty of share price resistance, if you like, at the current level. So I think going forward, if we're looking at the two floors that were set recently, both in February and of course at the end of March, and then also latterly, if we go back to July last year when we hit that last low. So we're seeing the company come back, revisit those lows, and then bounce off again. And I think from a share price performance standpoint, we'd need to be, getting back up to 19 to 20p before we could say that it's broken out of the current cycle. But there's certainly a floor around just below where we are now. So I think if you're buying it at this level, then yes, debt notwithstanding, I don't think you'd be exposed to too much more downside.
I'd wait for it to break up rather than break down. I always buy the strength rather than weakness, because it could break down. There's nothing to say that floor can't go. Okay, what's the next one, Al?
Okay, so it IPO'd today. We've spoken on numerous occasions about the eponymous Mr. Carl Friel.
He's a nice guy, Carl. I like Carl. I got a lot of time for Carl. He's very successful. He's very, he knows his stuff. He's Well, what my biggest regret is? I took a position in it was Open Orphan at the time, and literally I just thought, this guy's raised a big chunk of money at twice the market cap premium, and literally he's put money into it. I thought, this is unbelievable. So I put some in, and it rallied. And for some reason, I took it off, and then it went off. That was a silly thing to do. But no, Carl Hill's got a very good track record. So anything he does, it's worth paying attention to. I'm not saying invest in it, but pay attention to what he's doing. Do some research, because he's a shrewd guy. He tends to, put a bit of his money in, which I quite like.
Well, he's a shrewd guy, and he surrounds himself with shrewd people too. And that's. And I was having a chat before I came on air with somebody who I respect immensely, who has been in the markets for many years, and he's probably at one stage run about 70 companies at one time. He's an incredibly clever chap, and he knows Carl and greatly respects him. For some reason, the message about the IPO hadn't got to him, but he came straight off the phone after talking to me, and he's gone involved. So that's very good to see. But European Green Transition is Carl's new venture. EGT.
They've changed the thing on here. London Stock Exchange used to have a. I can't see it. Can you see it? I'm looking at IPOs, debt equity, main market, direct list of SPACs. It's not that. So it used to be on.
If you just type in European Green Transition into the top right hand corner.
European. I want to see if Green
Transition. Yeah.
EGT, is it?
EGT. That's it. Yeah.
Oh, there we are. Cool.
Yeah. There you go.
Oh, what's it all about, Al? What's the...
Okay, so the company's aim is to capitalise and build a portfolio of green economy assets in Europe. to capitalize on what we've been discussing, right at the start, the copper price, the gold price, the energy transition. So the move to EVs, the move to clean energy, the move to green technology, in line with what governments across the world are aiming to do, which is to reach that net zero point. Now, Carl has put together a team. He has Aidan Lavelle, who's coming as CEO. Aidan's a very experienced geologist, many years' experience in the mining sector, and his core strategy is to invest into assets and advance these assets by identifying value inflection points, and then implement what they refer to as a disciplined strategic investment approach, and monetize those assets through sale or partnership with larger industry players or investors. Now, if that sounds familiar, that's Carl's mantra. That's what he does, because he's able to bring people together. He's able to spot assets at a certain valuation, have the vision to be able to develop and build those assets up, and then partner with players further down the road. That's exactly what he's done with HVivo and with Poolbeg. Poolbeg develop pharmaceutical and biotech assets. They take them on to a certain point, and then they partner with the big players or sell them on at a later stage. And both Carl has done it with Amrit Pharma, of course. Amrit Pharma started out as a small company, was sold some years later and made a huge amount of money. I mean, he moved Amrit Pharma on for 1.48 billion. He's done this in the energy sector before too. Acquired Cove Energy in 2009 for 1 million. Sold it just under 3 years later for 1.9 billion in 2012. And Open Orphan, of course, we've already discussed Open Orphan and HVivo. So he's got a track record, and also if Carl gets involved in something, then the market perks up and listens, but also looks at the timing of what he's doing. And I think what he's done here is a very clever move, because he's come in at a time where resource stocks have had a very tough few years. The prices are still low. There is interest there. Some of the prices are starting to move, but something like this could play a major role in reigniting interest in that sector. So the company currently has 3 assets. It has the Ulstrom rare earths project in Sweden. It has the Pajala graphite project also in Sweden, and it has a series of assets in Saxony in Germany to do with lithium and other metals. So it's going to invest in and develop and look at these projects, invest into other projects, and it'll basically exit when the time's right, when the value inflection point is reached, and then move on to the next stage, all the while building value. And certainly the IPO today has been very well received. I mean, he raised 6.45 million from institutions, including his own company, Raglan Capital. And there was a book build with retail investors too, where a further 500,000 was raised. So basically 7 million raised in total. The company's come to the market listed at 10p. So a really sort of strong performance, I think, to come from the group. Interesting too, on the EGT website, EU President Ursula von der Leyen is quoted on there saying, "Rare earths will soon be more important than oil and gas. Our demands for rare earths alone will increase 5-fold by 2030. So if you just let that sink in, we've see so many small.
Oh, hang on. I'm right, it's sunk in now.
What's up?
It's sunk in now. I've let it sink in.
Okay, it's sunk in. Right.
It took a while.
Very
so
good.
I've got, long
so
legs.
it's now sunk in. So let that sink in. It has sunk in. All of the companies that are working with on these assets or have projects mining for these assets, there's going to be a supply squeeze. We know this, and we've already discussed the amount of copper, for example, in internal combustion vehicles compared to EVs. You then look at graphite in EVs. The amount of graphite that's taken up, and then when you get to wind turbines, all of the magnets that are needed in those wind turbines, the rare earth elements that create the magnets, the amount of applications are nebulous in this regard. So the company's come to market. We're going to hear a lot more from Carl over over the next few weeks. Carl and his team, particularly Aidan Lavelle, the chief executive. But it's exciting because he's got involved and he sees an opportunity. And I think the market as a whole, and also investors in other small resource companies, should take heart from that, because when a big investor like this comes in, sees an opportunity, it means the market is probably going to turn.
Yeah, well, do you know what I was going to say? I know Kyle's clever, and he's there we are, it's Raglan Capital, which is part of him, and these owns 5.3%. But I'm just thinking, Jeremy Martin, is that Jeremy Martin from Horizonte?
It could well be. It could well be.
Wow.
Yeah.
We didn't even put any money into. If that's Jeremy Martin, I don't think he put any money into Horizonte. I think he had lots of options. He obviously has got money there, which will annoy shareholders. But no, I know Carl is very clever. I'm just thinking, at the moment, I said back 3 years ago, most of the stocks I held were loss making. Because the money was cheap, it's easy to raise money, and it was all about hope, high potential. They were rallying like crazy. It's a different market now, of course, and now 80% of my stocks are cash generative stocks. They don't need to go to the market. So companies who need to go to the market, and generally pre-revenue resource companies, are suffering a lot, and that's why, because any rise in share price, they'll raise money into it. It'll get weak again, and they can't raise a lot in this market. So it's going to be raising money as often as they can. So. Yeah, I'm just wondering if he's right. Maybe if Kyle's that sharp, he's called the bottom here in the resource market, because we're seeing copper rally and we're seeing gold rally. Yep. Maybe he is. Who knows? Maybe, but I still don't think it'll get easy. Well, no, it depends on that. Depends if it rallies hard. I don't
never
think
goes
it'll
up
be
in a
easy.
straight line.
No, I think even if they reduce interest rates by a quarter of 1%. The market's not going to go bananas, and all of a sudden it's easy to raise money for pre-resource companies. I think it'll be hard for a while still, because people don't tend to believe a rally is happening. Most private investors invest through the rear view mirror. They don't look ahead; they look behind and look at their portfolio value and say, "Oh, it's awful," and they start to sell at the bottom. Yeah, it is awful because you're at the bottom. It's like, look forward a bit. That's what you should be doing. So it'd be interesting to see if because different thing is when he did Open Orphan. There was revenue generation quite quickly, or there already was revenue generation because he had the other side of it. So yeah, very interesting. But we'll see. So he didn't have to rely on the market. So what was it? Venn. So Venn already had cash money coming in, and he's got HV there as well.
Yeah,
so okay.
This is a different set of challenges, and probably I'd argue his greatest challenge to date. But I think the fact that he has confidence to launch into the AIM market now, firstly, it is a vote of confidence in what has been a pretty torrid year for the London Stock Exchange and AIM in general. And secondly, it does, I think, signal a turning point in the market. And, for a big investor like Carl, because, he will have done a lot of background work and work with a lot of advisors to
work. Time's on his side, isn't it? Time's on his side, because if you think about it, I mean, like you said, you have got the European sort of European Commission saying that they want to source more projects from source more critical minerals from the EU area, because largely we rely on China, and you don't want China holding the strings to the metals that will power your industries. Yeah. So that's going in his favour. And of course, commodities are at lows, or they were at lows. They've been having a hard time of it. So it's if you're going to buy something. People are buying stocks, resource company stocks, a lot higher level 2 years ago. So if you still think it's a good project, it's worth so much now, why wouldn't you buy it now if it's like, 60% cheaper or 100% cheaper or 90% cheaper? It wouldn't be 100% cheaper because it'd be bust. But, there are resource companies out there whose share price is down by about 90%. Now, if you were buying them 2 years ago, why? Was it just sentiment, or do you still think there's value in the project? If there is value in the project, then there's no reason why you shouldn't be buying now, because it's a lot cheaper,
Yeah, exactly. And and also, I think the challenge lies in these companies getting through that phase when they are in exploration phase. They're not generating money. I mean, I interviewed Ryan Mee, the chief executive of Fulcrum Metals last week, and we were talking about cash generation, and they have a gold tailings project, and they're going to be generating cash from there in the not too distant future. And that's how you've got to think. He's then also looking at licensing some technology that could be sold on to other companies to use. I think as a chief executive, if you're going to survive, what this difficult period for miners, when it's hard to raise money, generally speaking, you've got to be innovative and you've got to think of different ways of doing it. And certainly, I mean, that's going to talk about ECR Minerals in a second, and that's what they've managed to do during a very difficult time for the markets.
Yeah, so saying they've raised gross proceeds of 6.46 and market cap around about 14 million.
Well, they raised 6.46 million from institutions, including Carl's Raglan Capital, but they've also raised a further 500,000 from a book build with retail investors too. So
okay, marvelous, lovely. Okay, go on to ECR then. They've just raised some money, haven't they?
They have, yes. They've raised a further 585,000 at...
That's the trouble, you see, at the market now. In the bull market, it doesn't matter, but what happens is that, do you know the best performers are? People don't think about it. They play around with pre-revenue resource companies all the time because they do spike, and there's a chance to make a good bit of money if it rallies. But if you keep having to go back to the market, of course, and raising money, then that affects the momentum of the share price because you've done it in shareholders. And you've usually done it at a discount. So you do have this, cycle of share price rallying, raise, comes back down, and it's hard in a bear market. I mean, but anyway, go on.
I was going to say, I think we saw a sea change in the business last year. I mean, if we look at what ECR have done, and Andrew Haythorpe and the team, worked hard to keep the business on an even keel after Craig Brown sadly died. Of course, we've spoken about that before, Just, and he stepped down in September last year, and in came Mike Whitlow, aka Doc Holiday, and also Nick Tulloch. Of course, Nick Tulloch is chief executive of Voyager Life too. And between the two of them, they came in. They raised 585,000 in September last year at 0.175p, but they didn't do it through a broker. They went out to high net worths, and I've seen that. I've seen the list of people who invested into the company, and it's backed by some pretty impressive people. So they raised the money. They've gone back to Creswick, and they have been drilling in Creswick, where I think the management team always felt the greatest potential existed. And today they've come up with a really strong result from an area called Cuboid Hill, which is north of Ballarat, the town of Ballarat. But that entire area is full of historical workings, full of historical gold mines. And today they've come back and they found two high grade results, but which is what was far more significant was they found extensive mineralization over a large area, with an average grade over those large areas of 3 grams per ton, in some areas 2.25 grams per ton. And that compares to mines where you're seeing head grades of at around the same level, or elsewhere in Victoria where grades average around 0.7 grams per ton. So what it means is, for the first time in the company's history, they've actually got something they can commercialize, which is of a commercial standard, and that's hugely significant. Now also, Nick Tulloch is notoriously tight, being a Scotsman as well, and he's very careful, very frugal with the books, and he won't mind me saying that either, by the way, Nick. So he's run the company very carefully. They have or had a number of historical assets, including several drill rigs. They bought a new drill rig which finally arrived from China last year, and they have now sold that rig to a company. They're getting paid $33,000 a month over the next 10 months. They've also sold some other plants. They've raised $70,000 here. They've raised other money here. They also have a property in Creswick, and they're selling that. They've applied for planning permission to build a house on that property. They're then going to sell that land on, bring the money back into the company. Plus, a few weeks ago,
they're going to build a house and sell the house?
No, they're going to get planning permission, because you can sell the land for more when it's got planning permission to build a house. So they're going to sell that. So And then a couple of weeks ago, they raised a further 585,000, this time at 0.3p. So, and as Mike said at the time of the raise, we were offered this money at 0.3p by a broker, so we took it. And the broker, who I know, Axis Capital, raised the money for very modest fees. So the brokers are now realizing, no, you can't go to market and smash the price to pieces. You've got to work with the companies, share their vision and work alongside them. And that's what Axis have done here. So not only do ECR now have money to execute their campaign and plans for the whole of the year, they've also got further money to come in from assets that they have yet to sell. And, this is very important. I think, they've now got a commercial asset in Victoria. They've got more results to come from there. They've got more results to prove up. But I think we're going to see, this company really take some big steps forward this year. And the fact that they're fully funded and they've got more money coming in, I find that, that's going to be very comforting, I think, to investors going forward.
How much the raise? I mean, the trouble is, drilling is not cheap, is it? It doesn't last.
It's not cheap. No. So they've got 33,000 a month coming from the rig sale. They've raised a further 70,000 from the sale of an excavator. They've got other bits and pieces they're selling off too. They've got the house, they've got the land rather in Creswick that they're going to sell. They'll probably get about 400,000 Aussie dollars for that, maybe a bit more. Then they've just raised a further $585,000. So they've got everything covered for the year. And when Nick says they've got it covered, believe me, they've got it covered, because Nick is very careful with what he spends and he runs a very tight ship financially. So
they're selling stuff and again, plan mission. It's quite, in the tough market, you have to be wily. You have to use what you can to raise some money.
Exactly.
And exactly. I like the fact there's again planning mission in a house there, and maybe we should get a planning mission for a mansion and just sell it for that. So it's a 17-bedroom house and
17-bed house. So some rich Aussie billionaire comes in and buys the land at a premium. But
it's probably got gold in the garden.
It probably has.
if you look down, yeah.
But I think if you look at
but look at that share price on that. So it's literally, that's dreadful, isn't it? But it was it's $3.20 a share back in 2010.
Yeah, I know.
And now it's point. What is it? What is it now? It's point 0.3.
Well,
that's like a 99% destruction value there.
If you look at it from September last year, when Mike and Nick joined, you can see what they've done for the company since joining, and obviously we've seen the shares blip up briefly over 0.4p, but it's that series of higher lows again, and that's what we're seeing. We're just seeing a picture of building value, and each time the share price retracts, it comes back to that higher low point, and you're building a floor there, and I think. And I think the way the news has been managed, and the fact that there's more money to come into the company, and also when Nick went to Australia a few months ago, they're talking about they had lots of meetings with other companies over there. There was a lot of interest at the Minds and Money show that I attended last year. I interviewed a few people there too. There is a buzz around this company at the moment, and I think they're. Of all the small cap companies you could look at and back, I think ECR have got their ducks in a row for 2024.
Well, don't worry about ducks. Gold you should be worried about. Hey, listen, Al, you hold some stock in this, are you?
I hold a lot of stock in this, yes.
There we are. We have to be. Are you a significant holder, Al?
I'm not TR1 level, no, but I certainly hold plenty of stock. Yeah.
Well, we got to point that out because Alan is.
I do have an interest, yeah. But I also have an interest in Harland and Wolff too. I'm invested into there, and.
You like high risk, do you? Hey.
Yeah.
Hey.
Yeah. But again,
Oh bloody hell! Sorry, go on.
Yeah, you look at the risk reward ratio, and I think you look at
risk
at what the company is doing, and also the revenue it's got lined up to come in from these big contracts. What they're doing, what they have to do is restructure the borrowing, and then when that money comes in, the debt gets paid down, and all of a sudden you've got a company with huge assets, with a highly skilled workforce, with the very latest in technology that's competing globally to win big contracts.
I know that, Alan. But debt, we've talked about this. Remember, what was the company we kept arguing about on debt? And in the end, it went through. What was that?
That was Thomas Cook, yeah.
Thomas Cook. We had a bit to and from for that one months, and in the end, it went bust. I said, I don't like to say I told you so, but I just think debt it's almost like a rope around someone's neck with a stone on it. And you find it hard to swim with that on it, and all of a sudden, adding the stones to it, the rope.
I think there's a slight difference there because I was recommending Thomas Cook as a trading stock because the share price, and I remember it was bouncing between 10p and 20p. So I got in a few times and traded between 10 and 20p. But
so what you're saying, Haaland is an investment? Is that what you're saying?
I think Haaland is a good investment at these levels, yeah, because we are at that year low. We're seeing that floor under the company, under the share price. And it's managing the debt. The company is managing the debt, but it's the Falkland government are not going to award a contract to a company they think is going to go bust, are they?
I don't know.
They are preferred,
how much due diligence does the Falklands government do? I don't know. I mean,
they are preferred bidder status. So
but
they're not going to get that point.
But if they do go bust, then it'll just go to the second bidder, right? They just take over the contract. So. It doesn't bother the Falklands government.
It's a little more complex, I think. with building ports and shipyards. It's
exactly. Hang on. Who else was on that list?
Scale.
Who else was bidding for that? Building ports and things in the Falklands. That's literally. We're trying to get to the Falklands. It's enormous.
It's a long way away. It's a long way away. Yeah.
Anyway, please do your own research on all the stocks we talk about because they're largely very high risk, nano cap stocks, pre-revenue, lots of debt. What are we doing? Anyway, there we are. Alan, thanks for that, and we'll speak next week.
Cheers, Justin. Next week.
The SharePickers Podcast with Justin Waite. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.